Today's presentation features Jake Quagliaroli, the Annuity Sales Manager for EquiTrust Life. Jake's going to touch on some of the innovative annuity opportunities found in the EquiTrust product portfolio, as well as some ideas on how to position these products to your prospects and clients. Please remember, as is our policy, to use the question dialog box if you have a question. We don't open up the lines to phone questions, so just type your question in. We'll feed that to Jake as we're moving along here. Want to remind everybody, from day one at Great Plains, EquiTrust has certainly been one of our core annuity carriers, and we're also pleased to be one of the limited marketing partners for their popular single premium life products. So we just appreciate a long-standing relationship with the folks at EquiTrust and the great products and the great backroom service they provide. Jake, we're excited to be off to another great start with EquiTrust this year. Let's dive into your presentation and see how you can help all of us make some more annuity sales.
Beautiful. Well, we will. Let's definitely do that. And I want to echo first off, Rob, thank you very much for the opportunity to do this. I know we had a great single premium presentation in the last couple of weeks. So excited to do some annuity presentation. And again, as Rob said, a great relationship, and definitely looking forward to a great 2014 and continuing forward. With that said, what we want to do here over the next 25 minutes or so is bring you into the fold, update you on some things that are taking place at EquiTrust, talk a little bit about the top selling products that we've got in the portfolio, and make mention not just of key features of the products, because you've got a great team there at Hellerich Great Plains that you guys can lean on for questions, but to give you some product positioning ideas, how we're seeing these products used. And I always love to start with this slide up here, because if you were looking at the back of the home office today, it would look nothing like that. It's definitely a frozen tundra, snow everywhere. We've got a lot of Canadian geese out on that frozen pond right now, but definitely dreaming of summer and things to come going forward. With that said, before I jump into particular products and walking through the details and product positioning placement of those contracts, I like to take a couple seconds and just bring us back to the power of the products that we offer and the benefit that we can provide to clients in their time of need, when they're looking for income, when they're looking to rely on these dollars that they've saved for retirement, for income, to create a legacy, whatever it may be. And again, with the power of the indexed annuity, the traditional fixed annuity, we all know that you can never lose a penny based on performance of the product, as long as you don't take early withdrawals where surrender charges could imply. So if you came across a client with $300,000 or $30,000, and let's say that had decreased by 50% down to $150,000 as it is in this example, how long would it take them back just to get back to the initial value that they had on the contract? And you can see, because of the power of compounding, if they were able to earn 26% per year in 3 years, at 19% it would take 7 years, and earning 10% it would take 10 years, again, just to get back to that initial value, that initial dollar that they had in the contract. So again, it speaks volumes to the products that we offer, the benefits of the guarantee of principal that you have in the indexed annuity, because again, everyone is zero-year hero. In a year where the market's down, if you're able to get a zero return and then start fast-forwarding, it's going to take less and less time to be able to make up that difference and really let those assets and dollars work for your client from day one. Let's fast forward another slide. Again, as we talk about who our target market are, I'm not going to read through all the bullet points that you see on the slide, but we're really looking for individuals who are looking to diversify their money, bring things more to diversify their safe money, look for allocations as they're looking to start to go from growth to protection to income, and maximizing their income, more than likely in their retirement days. But again, individuals looking to reduce the risk of their safe money. And I love this slide. I'm sure many of you have probably seen it. It's a slide that I was able to pull out of, I believe it was the New York Times, about 2.5, 3 years ago. And the sad part is that the tagline still fits today, and I know many of us are probably working with clients that feel like this. Heck, there's some of us on the call that might be in this same situation. And as you see on the bottom there, it says, if we take a late retirement and an early death, we'll just squeak by. So again, as we talk about product and we talk about placements, what I really want you to do is think about prospects that you're working with. Think about clients that maybe you've sold here recently, where some of the products that we look at, we talk about might be good fits for the product. As we transition from an industry sort of overview and more into the products, one of the things that I really want to highlight about the EquiTrust portfolio is we have very clean, simple products. Many of the features that you have on our index products are commonplace on each and every index product that we offer. And the real benefit to you and your client in those situations is you don't have to pigeonhole a client into a product that might not fit their timeline, might not fit the need that they have. You've got 10% liquidity based on the account value after the first contract year, full accumulation value at death, a nursing home waiver that waives surrender charges on our contract for anybody who qualifies. And qualification is contract in force for 1 year, contract in force for 1 year and client 90 days in a qualified facility. So you've got all of those features that are available on each and every one of our index products, again, meaning you don't have to potentially place a client or look at putting a client in a product that might not fit their horizon, might not fit their needs, just to get access to a nursing home feature or full accumulation value at death or liquidity options. The other great part about the product is clean and simple. What we've tried to do is have a consistent portfolio where things are not changing. And you see with our portfolio, there's no vesting schedule on any of our bonuses. So when a bonus pays into a contract, it is 100% the client's. That bonus is going to pay into the accumulation value. It's going to pay into the benefit base, which we use to calculate income. And it's also going to pay into the surrender charge. So you've got full access to that bonus from day one. From a commission standpoint on our index portfolio, there's no age break. So going into the product, what you see is what you get with the product. And we've also got very competitive, strong renewal rates, which are available out on our website. You're able to see. We publish them for each and every one of our contracts. So again, real strong, clean, simple, translatable portfolio to a client, so they're not getting lost in the explanation of the product. Now what you see in front of you is our suite of products that we offer on the index side. Again, what we're going to highlight here in the next 10 minutes or so is our top selling products, and you've got our Market 12, our Market Power, and our Market 10 bonus. We're going to go into each one of those, but I want you to know, you see minimum premiums where you are. You're looking at $20,000 to $30,000. If you're working with a client that might have they're looking to do a contributory situation or develop a Roth IRA, traditional IRA. We do with our Market Booster have a minimum premium of $2,000 on the qualified side. It does take additional premiums in there. We've got definitely other options in the portfolio. Again, Great Plains team know each one of these products. But again, over the next couple slides, we'll highlight a few of the top sellers. Transitioning to the specific products, again, what I'd really like you to do is think about clients, prospects that you've recently worked with, talked with, or are still working with at this point. And during those conversations, has there ever been a situation where you're talking about maximum upside potential and accumulation? Are you talking about income and trying to get the highest output or using the least amount of those clients' dollars to get them to the number that they're looking for from an income standpoint? Well, the Market 12 bonus and its unique accumulation value bonus structure is a great product, again, to maximize accumulation, to maximize income, or again, use the least amount of the client's dollars to get them to the income amount that they're looking. And it's because of that unique accumulation value bonus structure. What it does, the way it works, again, as we mentioned, it is a 12% bonus. But on any premiums received in the first year, the client's getting a 6%, again, fully vested bonus. It's theirs, and it's working for them from day one. So again, from an example standpoint, you got $100,000. Contract's immediately worth $106,000 working for the client. Then on the first 3 contract anniversaries, so end of month 12, end of month 24, and end of month 36, EquiTrust is going to pay a 2% bonus into the contract based on the accumulation value. What that means for you, what that means for your client, if there are no gains during the first 36 months and no withdrawals have been made, it's going to be an effective 12.5% yield on that bonus. So it really, again, allows you to maximize upside potential because, again, as many of you, I'm sure, are thinking, if you're able to get a 3%, 5%, 6%, even more return during the first year, second year, your client's going to benefit from that 2% accumulation value bonus that's going into the contract, paid again at the end of year month 12, 24, and 36. Other great feature from a prospecting standpoint, from a referral standpoint. Let's say the market's down during those first 36 months, and the client is getting a 0 return on their indexed annuity. You can actually sit down and do an annual review and show that the contract has grown a minimum of 2% because of that accumulation value bonus that's being applied to the contract in those first 3 years. So again, a great opportunity in a down or a volatile market to know that you've got some guaranteed growth built into this contract because of that accumulation value structure. And that's why when we look at maximum accumulation potential, because of that structure, that value, you see that. Moving forward, we also talked about income, and we're going to talk about our income rider on the next slide, but because of that accumulation value bonus and it paying on the benefit base as well, you've got maximum growth, or our top performing product in our portfolio as it relates to income. But what we have here is actually a sales piece that we've made available. It's out on our website. It's available for you through Great Plains. And what it does is it compares the accumulation value bonus versus an upfront 12% bonus. And it can be a little challenging to see on the screen, but what you see is that blue line is a $100,000 premium receiving a 12% bonus, growing at I believe 2.85% on the contract. And at the end of 36 months, what you've got is roughly $119,500 in that full upfront 12% bonus. The orange line, what we're doing is depicting again a $100,000 premium with a 6% upfront bonus, a 2% accumulation value, and at the end of 36 months, you've got roughly $121,500. So to the benefit of the accumulation value structure. And again, if you're able to get, say, a 5, 6, 7% return in that first contract year, it's going to take the difference and move it to the benefit even greater than what you see on the screen here to the accumulation value structure. So again, a unique, not something that you see in the industry all too often, but has a lot of positive benefits available to the contract because of that structure. Now, as I mentioned, we also relate this product. This is our top performing, top income generating, or the product that uses the least amount of the client's dollars to get them to the number that they're looking when you combine the Market 12 and the income rider. Before we go into a couple examples of how that works, I wanted to again highlight some key features of our income for life rider and the benefit base. First and foremost, from an accumulation standpoint, we've got a 6.5% compounded roll-up that's guaranteed for 15 years. The cost or fee of that rider is 50 basis points or 0.5%, and that fee is calculated on and taken from the accumulation value. And I really want to stress that aspect of it, because in a day and age where, from an industry standpoint, where we're seeing the average fee on an income rider is actually just crossed over 1%, to note that we're at 50 basis points, half of where the industry average is from a fee. But a lot of times what you see is that fee is calculated on the benefit base. So if you've got a carrier that's growing at 6.5%, 7%, 8% simple, 9% simple, you've got that fee being calculated on a much higher value, which really takes that effective yield of that bonus higher than the percentage that they're showing you. By it being 50 basis points, first and foremost, it's lower than the industry average, but being calculated on and taken from the accumulation, what you're seeing is the net effect of charge or fee for that rider is less from an industry standpoint, which also allows the product to perform. We all know, I'm sure we've had clients in the past that have changed their mind, their situation has changed, and maybe if we put an income rider on there today, their situation changes down the road. They might not need that. Well, by having only a 50 basis point fee, you've allowed the contract to perform as well, and hopefully given them some upside potential on the accumulation side. The other great feature from a client standpoint is there's no age restriction to attach our income rider onto the contract. So if you're working with a client who's 35, 40, 45 years old, you're able to attach our income rider onto the product at issue and really benefit from that true 15-year compounded roll-up that you see with that 6.5%. Transitioning from accumulation to income, the one thing I want to highlight as it relates to our income rider is, although there's no age restriction to attach our rider onto the portfolio, the client must be of the attained age 50 in order to turn income on. In addition to that, the contract has to have been enforced for at least 24 months before they're able to turn income on. So again, accumulation, 6.5% compounded roll-up, 50 basis points or 0.5% fee calculated on, taken from accumulation. But in order to turn income on, a client must be of the attained age 50, contract enforced for 2 years. What we've seen, though, is a lot of situations where maybe a client does need access to, or they're looking to get income up front. We'll see a lot of scenarios where we'll do a split annuity. And by split, we're not talking the traditional, SPIA multi-year guarantee product. We're talking about an immediate annuity, a 5-year payout, with the remaining assets going into an index annuity with an income rider. So you're really letting that roll-up work in the client's benefit, maximizing their upside potential. We are also RMD and partial withdrawal friendly, meaning we allow the client to get access to those funds up to the 10% without a penalty. They're still going to get the benefit of that 6.5% roll-up, even if they take a withdrawal prior to income. Now, you see from a payout standpoint, as I mentioned, we start at age 50. We're at 3.5% on an individual, and we increase 50 basis points every 5 years. Very competitive on the joint side as well. It's just a 50 basis point, 0.5% reduction in terms of payouts. And again, as it relates to single or joint, and you can do joint on qualified money as it relates to the payout, but that's something that you elect at time of electing income, not at issue of contract. So that's something you've got the ability to look at and run some illustrations in terms of how the payouts work. But as I mentioned, going back to a positioning standpoint, this is the top performing product that we've got in our portfolio as it relates to income generation, or again, using the least amount of the client's dollars. So what we're doing in this example is taking a client with $100,000, we're allocating those funds into the Market 12 contract and electing the income rider. And what you're going to see, we've got right off the bat, as we mentioned, a 6% bonus, so $106,000, compounding at 6.5% roll-up. Then at the end of the first contract year, we're going to pay a 2% accumulation value bonus. So you've got over 15% guaranteed growth in the benefit base during the first contract year. Year 2, we're going to compound again at 6.5%, roughly $7,500 added to the benefit base. On another 2% bonus based on the accumulation value or the benefit base. Now you've got over 25% guaranteed growth in that benefit base. Year 3, 6.5% over $8,000 growth in the benefit base, 2% accumulation value bonus, now over $2,600. So you've got almost 36% guaranteed growth in the benefit base. Let's fast forward 5 years, 10 years, 111% growth in terms of the contract. So extremely, extremely strong growth in the benefit base. Then what we're doing is obviously taking that amount, multiplying it by the payout factors that you saw on the previous screen, and that's going to be the guaranteed minimum that the client, as long as they don't take excess withdrawals, is going to receive for the remainder of their life, even if that benefit base accumulation value grades down to 0. Fast forward now, I want to transition a little bit from the income from accumulation and talk a little bit about another unique product that we've got and a great opportunity to work at CD type dollars, or to work on clients that maybe have seen something negative about annuity out in the marketplace and they feel that they're just all long-term, they don't have access to their funds. And as we talk about that, the other way I like to position this is, what's the cost of doing nothing with your money today? Because we still have a lot of people that are sitting on the sidelines. They're concerned about volatility. They're concerned about market risk, and they're not getting anything. But then you've also got some of those clients who have put money into a CD or put money into a money market account. And when you look at industry averages, they're really not, with tax consequences and whatnot, getting any benefit out of those assets working for them. So what if you had a product that could get that money working for the client today, still keeping the client in control, and keeping you in control, but getting, again, that money going for them, maximizing their upside potential. So as you think about clients and prospects that you're working with, think about where that situation has come into play, or where there's clients that are maybe a little concerned about the annuity. The Market 10 bonus within our portfolio, because of the return of premium, is a great door opener, a great opportunity to get that CD type money, to get that money that's sitting on the sidelines, working for the client today, but again, keeping them in control. And the real reason why is because on every Market 10 bonus contract that we issue, there's a return of premium feature that's added to every single contract at no cost to your client. What that means, what that does for them, at any point in time, if the client wants to walk away from the contract, maybe they've had an emergency come up where they need access to those funds medically, whatever it may be, the client's situation has changed, they're able to surrender the Market 10 contract, and they're guaranteed worst case scenario to get no less than the premiums they put into the contract. They don't have to not fulfill 2 of 6 ADLs, no questions asked. EquiTrust would write them a check for the premium they put in, less withdrawals. But the other great features that you see on the screen in front of you, it's a 10-year contract. Surrender charges start at 10%, but we pay a 6% premium bonus that, again, is fully vested on any premiums received during the first 5 years. So when a client puts in $100,000 today, contract's worth $106,000. Year 3, client has another $50,000 they want to drop into the contract. They're able to do that. We're going to pay that 6% bonus on that premium, so put in another $3,000. And those funds at that point really only have a 6-7 year surrender schedule because everything is based off of the initial deposit, the issue date of the contract. And again, that return of premium feature is still out there for that client, for them working today. Now, we recently had a situation where, and I know from a suitability standpoint, all those questions are out there, but a situation working where a client issued one of these contracts for roughly $120,000. And 1 month after they issued this contract, the individual on the contract lost his job. And a couple weeks after that, his spouse also lost their job. So what they did is they actually ended up surrendering their Market 10 contract. Now, obviously, they're going to have tax consequences, but because of that return of premium feature, it was a great way for them to be able to get their money in the time of need. Now, again, we don't like to see that happen from an individual standpoint, from a product standpoint, but it gives you some flexibility. It's a great opportunity to maybe do a laddering strategy where you put a portion of the client's assets into the Market 10, and maybe if we're talking about income as well, we can take another portion of the assets, allocate it to the Market 12 bonus, attach the income rider on there. So now you've got flexibility of those dollars to the client where they still are in control. They've got access to those funds if an emergency came up. But you've also got a portion of the assets that are in a Market 12 income rider situation, helping propel them from an accumulation maximum income standpoint as well. So it gives you the availability, flexibility to do a few things. But I also want to quickly highlight the builder bonus. For those of you on the call today or listening to this, this is our return of premium product in the 8 states that you see on the screen up there. So if you're writing in Connecticut, Delaware, Minnesota, Nevada, Oregon, Texas, Utah, or Washington, you also have this return of premium contract available to you. And the best way to look at it is anywhere the Market 10 bonus is approved, the builder bonus will not be approved. And anywhere the builder bonus is approved, the Market 10 will not be approved. So it's an either or, but again, a return of premium feature in some of those more challenging state approval contracts. And the other big difference that you see with this product is the premium bonus is only applicable to premiums received during the first contract year. You're still able to add additional premium in, but they're not going to get the benefit of a 6% premium bonus on ongoing premium after the first contract year. Last but not least, I want to highlight from a product standpoint, we've got a very competitive multi-year guarantee portfolio. As you see on the screen, we've got a 3, 5, 6, 8, and 10-year duration. And again, the great feature about this product is you know exactly, the client knows exactly what they're going to have in their contract at the end of either 3, 5, 6, 8, or 10 years. Now, just at the end of 5 years, what will happen, the client does have a window, will renew for another 5 years if they elect to, and get the current rate at that point in time, which you'll be aware of, which the client will be aware of. But again, a great short-term parking place for maybe an older client with CD-type dollars. They don't want anything to do with an index, S&P 500, whatever it may be. We've got some alternatives there, some good, strong rates based on today's environment. And this contract we also issue up through the age of 90, so it gives you some flexibility that you might not have where most index annuities today are issued up through age 80. Before we transition and close this thing out and open it up or potentially get some questions here, I want to highlight a couple sales pieces that we've got available in our portfolio. And I always love showing this slide because what you see here is a piece that we've got available. A lot of times in my travels when we're sitting doing training, I'll get the question of, well, in this type of environment, what should I be using? Should I be using monthly averaging, annual point-to-point, monthly cap strategy? Within our portfolio, with the sales pieces that we've got available, and these are actually available to be customized by you for your business. You'll see this one looks at the Market 12 bonus and looks at a one-year point-to-point strategy. We've got these pieces available for each and every crediting method that we offer on every product that we offer. So Market 12, Market 10 bonus, Builder bonus. You're able to customize these pieces for that strategy, for that product, and really take a look and compare how each of the different crediting strategies has performed in each of the different crediting years. And the other great part is, right now, although the S&P was up during the first 3 years of the product, what you'll see with the Market 12 is you'll still see growth inside of the contract if we hit a point where during the first couple years maybe the market was down. And you can see that from 2000 to 2001, and that's because of that 2% accumulation value bonus that's applied into the contract. So again, some great pieces that are available for you through Great Plains, through EquiTrust to customize and show the benefit of the index annuity and the power of the products that we've got and are able to offer. We also have some real nice binded show books, and we look at index annuities, income for life, traditional fixed annuities. And the great thing about these, and we get a lot of positive feedback from these, is they're not really product specific. What they look at is what income for life is, how sort of an income rider works, what an index annuity is, what the key components are, why it might be right. So it's a flip chart of 20, 25 pages. It's a client presentation that can help you keep online if you're working maybe with a client that's not familiar with these features, not familiar with these products, and give them a visual to go along with everything that you do in your sales presentation. So with that said, again, I want to wrap it up by thanking each and every one of you for taking the time to be on the call today. Hopefully you've seen a product, you've heard an idea that might work with a prospect that you're currently working with. You've got a great team. We've got a great partnership with Great Plains behind us. I've got all their information. I want to turn it over back to Rob, to Brad, to close it out and maybe answer any questions that might be out there.
Thanks, Jake. You did such a great job. We don't have any questions today. And I, too, want to echo what you said. We appreciate everybody being with us today. A couple of things I want to remind you of. As Jake said, your Great Plains Annuity Marketing Specialist can walk you through this product portfolio, would be delighted to discuss anything you're working on. Case development is a big part of what we do to serve the agents and brokers we work with every day. Also, besides the products, some of those great sales tools that Jake mentioned as far as the marketing pieces, the personalized pieces, the flip charts, your Great Plains Annuity Specialist can help you get your hands on those. So give them a call at 800-710-1115, and they can fix you up. A couple of quick announcements I want to make before we get off today. On March 19th, 2 weeks from today, we'll be getting together with Mark Kiner and Jim Blair of Premier Social Security Consulting. Social Security obviously is a huge topic, and for those of us involved in the day-to-day effort of trying to help people create reliable retirement income, certainly a discussion and an understanding of their Social Security benefits and how we might help them optimize those benefits is of great value to the annuity professional that's out there in the marketplace, and something that your clients are asking you about and looking for. We're going to offer our second NSSA National Social Security Advisor certification class here in Kansas City, just down the street from our offices, on May 5th. We have a special tuition travel program that your annuity marketing specialist can talk to you about. Jake and EquiTrust helped us sponsor the event back in December. We look forward to seeing Jake there at the May 5th meeting. But I certainly want you to follow up with your marketing specialist for details on this. We've just gotten the marketing materials put together and through compliance, so we'll be sending those out to you. But we're only offering a total of 50 seats. And we've got a fabulous conference facility where the training is going to be held. It's a one-day event. You're put through the grinder for one day. It is an full 8-hour course. You get 8 hours of continuing education towards your insurance license, and you're going to see a presentation that's second to none, and in terms of arming you, educating you to go out to point of sale and effectively help your clients with their concerns and questions about Social Security. The other thing, Rich just put the finishing touches on this. Great Plains now has an E&O program for the producers that are contracted and working with us. Be sure and ask your annuity marketing consultant about that E&O opportunity. It's something we're just tickled to death to be having our portfolio for you, and certainly something else you want to ask them about. Jake, thank you again. We always appreciate you coming in and helping. Great presentation. Everybody have a great day and a great rest of the year. Talk to you soon. Bye-bye.